heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, tech leads us lower as we end the week in the red. All eyes on NVIDIA earnings as the Trump trade, it fades.
Plus, Alibaba reports solid growth in international and cloud units, offsetting weak sales in its China e-commerce business.
And SpaceX gets ready to launch a tender offer in December, which would value it at more than $250 billion, according to reports. But first, from private markets to public markets, we're having a pretty lower end to the week. Look, the risk-off focus has come, whether it's Trump trade, the euphoria dying, or whether it's Federal Reserve reality as we cut our bets for a Fed rate cut in December to as low as a 50% chance now. We're off by 3%. This is the worst week since the beginning of September for the NASDAQ. Just bear that in mind. 4 straight days of losses. We thank one of our producers for that particular key fact. That is the worst set of losses that we've seen going back to April on a back-to-back basis. We're looking at Bitcoin, though, manages to continue to power higher on the week, but not on the day. Bitcoin up some 15%. It's a 7-day version of this, Ed, because also it trades over the weekend. What are you looking at on a micro basis?
Yeah, I think part of the reason that the overall euphoria has faded post-election is the here and now is about technology earnings. Applied Materials is the biggest US maker of chip-making equipment. It's like the US version of ASML. It's given us a weak outlook. We're going to dig into that later in the show with Bloomberg's Ian King. Clearly, the stock is down a lot. Then you have Alibaba. These are the US-listed shares, or ADRs. And we kind of summed it at the top. They're seeing really weak or anemic growth in e-commerce in China, which is their domestic core business, even if they're doing well in other areas. Again, we will dig into that a little bit more in just a moment. But don't forget, earnings is a story from here on in, because the big one next week, NVIDIA, all relevant. And we'll get to it later in the program, Karen.
November the 20th after the market. All eyes on NVIDIA, all eyes on what's moving the markets right here, right now. Bloomberg, of course, Isabel Lee is over in Boston today. Just tell us what you're looking at in the markets.
I'm looking at tech, and it's really interesting because it's a wait and see for all these tech companies. They're really struggling to parse out what a second Trump administration will do, and it doesn't help that Trump personally dislikes Meta and Alphabet. And if you look at the stocks, they're reflecting that. While we have Tesla up at about 20%, for a good reason, which is Elon Musk, the rest are really trading flat. And the NASDAQ, as you pointed out, is down for a 4th straight day. So that's really a really long stretch of losing streak. If you want to see where we're seeing action, of course, it's Bitcoin. It's up 30% ever since Trump has declared victory. And we're looking actually at the Saylor-Buffett ratio. So as we know, Warren Buffett's Berkshire Hathaway is an established company. It tracks boring names, so to speak, and MicroStrategy tracks Bitcoin. Well, that ratio, which measures the relative stock performance of both, saw its highest level since 2000. And it's not really a surprise because MicroStrategy is up over 400%, while Berkshire Hathaway is up just around 31%. And for more conviction, we saw $6 billion flow in through crypto funds. That's a record, Caroline. So it's really interesting to see the two spaces as this administration plays out.
Okay, Bloomberg's Isabel Lee, thank you very much. We mentioned it a moment ago. Alibaba reporting some solid growth in its businesses outside of China, international cloud divisions. And that kind of helped to offset some of the drag from an anemic Chinese e-commerce business. Bloomberg's Henry Wren out of London's been tracking this print, and that sums up the story. But what's going on, particularly in mainland China, with the Chinese consumer that has at least the US-listed shares moving downwards?
And as you said, this is certainly a result that has some good and bad, but the bad part is, of course, the local e-commerce business. Because this is the 2/3 of Alibaba's revenue generation, and what we've been seeing for this quarter is still anemic, because the revenue that Alibaba generates from third-party merchants, that grew only 2% during the quarter. So that's not a sort of rebound that investors have been hoping for. And the direct sale from Alibaba's platform also stuck in a decline as well. That really shows that consumer sentiment in China is still weak. Although this morning that we have some more positive retail sales data, in October, showing that the retail sales actually expanded by 4.8%, which is the fastest pace in 8 months. However, we have to take into account that these results came between June and September. And during that period, we can say that the consumer sentiment is really not on the mend just yet.
International growth. How resilient is that going to be in the face of geopolitical headwinds, most dominantly here in the United States? We're anticipating a new administration, which isn't very China-friendly.
Yeah, so as we discussed, the domestic e-commerce business has been weak for quarters and quarters. So they have to find a new growth engine. It used to be cloud, but cloud, that growth engine has been sputtering for several quarters in a row now. It has showed some signs of recovery, but still a long way to go. So another way to expand is through overseas business. What we see from PDD, Pinduoduo as well, which we've been seeing from Temu, explosive growth in the US. For Alibaba, the focus has been in other Asian markets. We're talking about Malaysia, Indonesia, those markets, and they've been doing quite well. Although we would have to point out that Alibaba is still burning cash in those markets, but we've been seeing in the past quarter is they are narrowing losses, and we see the margins has been improving, although it's still some distance away from break even.
Henry Ren, who's been across all of these Chinese e-commerce players, we thank you. Now, Ed, we're going to turn our attention in a minute to SpaceX. It's preparing a tender offer in December with a $250 billion valuation. We're going to get to those reports. That's next. This is Bloomberg Technology.
SpaceX is preparing to launch a tender offer in December that will sell existing shares in the business at about $135 each. That's according to a report in the Financial Times where they cited sources. Bloomberg's Bruce Einhorn is here with us. And Bruce, just for our Bloomberg Technology audience, the basics, a tender is where employees or some early investors sell shares. There's no new capital raise. The main point, I think, is a valuation of $250 billion or more is quite eye-watering, puts SpaceX up there. What else do we know?
That's right, Ed. So typically, SpaceX does these offerings twice a year. The previous valuation, which was in mid-year, was around $210 billion. So $250 billion, of course, a big jump up. It would be a record for a U.S. company. It's not a record for a startup. The record for a startup is $268 billion for ByteDance, the Chinese parent of TikTok. Just to give you a sense of just how much SpaceX's valuation has increased, a year ago, when there was a similar offer, the valuation was $180 billion.
It feels for some as though the valuation goes higher. Maybe it gets a Trump-Elon Musk bump. Maybe everyone's just trying to plow in money to associate themselves with the success of Elon Musk and the considerable, perhaps, ease with which he'll get better regulatory approvals when he's associated with the next administration. Is that something you're eyeing, Bruce? Certainly, Gwynne Shotwell, the president of SpaceX, is talking about that very thing this morning.
It's a good point that, of course, Elon Musk does have the ear of President-elect Trump. That said, though, this is a lot more than just a politics story. Starlink has more than 6,000 satellites in operation. Gwynne Shotwell this morning, speaking at a conference in New York, said that the company has launched more than 7,000 satellites. This puts Starlink far ahead of any competitor. So they are really the dominant player, for now at least, in low Earth orbit satellite communication, which the valuation partly reflects.
You know, Bruce, the focus on SpaceX is about reusability. The Falcon generation of rocket can go up and then come back down and be used again. But our attention is going to turn to Starship. What did Shotwell say about Starship? And I guess should the audience be looking out to see another test anytime soon?
Yes, so there will be another test soon. This morning, Gwynne Shotwell said that we should expect that on Tuesday next week. This would be the latest test of Starship. Starship is just a whole nother level bigger than anything that's existed up until now. And in her comments this morning, she also did say that the company expects to launch direct-to-cell service sometime before the end of the year, sometime in the next month or so. That would also put SpaceX out front in another business that's really just getting started, offering satellite-based communication that could go directly to cell phones without having to have any sort of satellite dish or any other type of equipment.
More than 400 Starship launches are possible in the next 4 years, according to Gwen Shotwell. Extraordinary numbers on both the valuation and the amount of launches. Bruce Einhorn, we thank you. Meanwhile, let's talk about Elon Musk's Tesla, seeing a big reaction alongside other EV makers. Today we get a reprieve. It was yesterday that a report hit from Reuters saying that Donald Trump and his administration is set to end some $7,500 EV tax credits that are currently out there. Joining us is Terry O'Day, In Charge Energy COO. Terry, so the point here is that when you buy an EV, you can get a nice, juicy tax credit, $7,500, and that would be wiped out potentially by the next administration. How important, how integral is that tax credit to demand?
Well, it's not clear yet, but we do know that it is important. It's very valuable to the industry. And it's important because of both consumers relying on it and manufacturers relying on it. So it's really about EV jobs when it comes down to it. And the current incentive is only available to American-made vehicles. So what we're really talking about is manufacturing in the US. And that's why this comes as a bit of a surprise. In the last time this personal tax credit was challenged, it had a lot of support in Congress from states that are manufacturing the components for electric vehicles, like states like Tennessee and South Carolina and Michigan and Illinois. They wanted to protect jobs, and that's why they protected this tax credit last time. So we'll see how this proposal goes in Congress.
Many of those states, not blue states per se, potentially red, and therefore affecting home territory to a certain extent. For your business, when you're thinking about the infrastructure play of this, does this set back the adoption of EVs in the longer term, do you think? I know it's hypothesis here, but does that make you think about readjusting your strategy?
It definitely has that potential. I mean, for our business, we rely on demand from consumers and from businesses. So this is a personal tax credit for individuals. There are other incentives in the industry that are definitely on the chopping block from this administration. So there's an important fight to protect a lot of those incentives now.
Terry, you said this is a surprise. Is it? Really? Elon Musk has been talking about scrapping subsidies for years. He has been close to Trump throughout the election process, and now in an advisory role, because Doge will act outside of government, he will have Trump's ear. But also, we had decelerating EV sales growth anyway for the latter part of Biden's administration. Why is it a surprise to you?
Well, I think decelerating sales growth was going to happen anyway, right? Because when you're growing year over year, double digits, you cannot continue that forever. Just the law of numbers doesn't allow it. So deceleration was going to happen. But this incentive has broad support, as I was saying. So that's why it comes as a bit of a surprise. And to be saying this so early in the transition is, I think, also kind of surprising. Look, this is not a significant tax credit in the range of new tax policy we're going to be seeing coming out of this administration. And it favors U.S. manufacturing, which this new administration has been saying is what they really want. So they're looking for manufacturing. This is something that does that.
Terry, don't get me wrong. I've got a Tesla Model Y. I think Caro, I'm right in saying, also has an EV. I leased it. It was a competitive lease because of the $7,500 tax credit. But big picture, what is it that's going to put electric vehicle sales, in North America at least, back on a path to accelerating sales growth? What do you want to see proactively the Trump administration do?
Well, the most important thing is that California has the right to regulate tailpipe emissions today, and about a dozen other states have signed on to that. They have regulations forthcoming that are affecting fleets. So fleets would be required to buy EVs when those fleets are larger than 50 vehicles in their fleet. and manufacturers would be required to sell to those fleets. So that dual regulation is in jeopardy. And overall, California's right to regulate tailpipe emissions is what created the EV industry in the first place. We think we can compete on an equal footing with gas and diesel today. My customers like Pepsi and FedEx and UPS and school districts across the country are already saving money by going to electric because it's cheaper than gas and diesel on a total operating cost. So we think we can compete on an equal footing, but it's important to have these regulations in place to just kind of get over the hump of these pilot programs and enable it to go to scale.
In so saying that, Terry, it almost makes me think, well, why have them if already you're able to compete? That's sort of therein lies the argument. And going back to the consumer right now, is it that you need to compete by what you do? Many people are reticent to commit fully to an EV. They've been going back to a hybrid model because they're worried about infrastructure and a lack thereof.
Yeah, and that's the real trick here. I think, committing capital to build out an industry like this is extremely risky. So those regulations provide the guardrails for investment. It attracts private investment and creates jobs. And so that's really what this is about, is not the, favoring one industry over another, but really just giving enough certainty to investors that they can put capital into this space to continue to grow that charging infrastructure, to continue to convert their fleets and do the things that we want to do for this space.
President-elect Trump's point, I think, is not that he's anti-EV, but that he's not fully all in EV. He wants choice. Terry O'Day, In Charge Energy COO, great to have you on the program. Thank you very much. Now, coming up, we're going to discuss the Department of Government Efficiency with Jennifer Palka from the Niskanen Center. There is a lot to discuss still about DOGE. This is Bloomberg Technology.
We're just getting started. And the thing I remember about last week is when Donald Trump was in this room, everybody else was celebrating. He was stone cold ready for the next step. But I also want to thank him for making sure that Elon Musk and I are in a position to start the mass deportations of millions of unelected federal bureaucrats out of the DC bureaucracy. That too is how we're going to save this country. And I don't know if you've gotten to know Elon yet, but he doesn't bring a chisel, he brings a chainsaw, and we're going to be taking it to that bureaucracy. It's going to be a lot of fun.
Entrepreneur Vivek Ramaswamy, who was recently chosen by President-elect Donald Trump to co-lead the new Department of Government Efficiency, along with Elon Musk, to cut excess regulation, it says, and expenses. Let's discuss this with Jennifer Palka, sorry. It's a Friday. Jennifer Palka, okay. Senior Fellow at Niskanen Center and former President Barack Obama's Deputy Chief Technology Officer. Boy, you have got inside knowledge about how easy or hard it is to effect policy change within a civil service that already exists. Look, Vivek Ramaswamy saying it will be fun to take a chainsaw to it. For many who work there, this won't be fun. But what's the reality? Do you agree that, in principle, efficiency needs to be found?
I agree that government has to get better at doing what we say we're going to do. And I think our inability to do that has sort of created the opening for this DOGE and sort of other initiatives that you see coming out of the Trump White House. Now, there's so many questions about this. You have significant conflicts of interest, especially for Elon Musk. They have established this thing outside of government, so it's unclear if they really intend to just rely on executive action or really get involved with Congress. So there's some questions about whether they can be effective. But I do think that there is a real problem behind all of this rhetoric that needs to be handled with probably more care than the way that Musk and Ramaswamy are talking about it.
Jennifer, I don't want to be naive to the fact that people have been probably trying to make government more efficient for a little while. So what is it that hasn't been done? Are we at the level now that this sort of decision not to care, not to be precise, but actually to just go at it with a chainsaw just every other Social Security number is out. Is that the place that we've got ourselves to?
I don't think it has to be. I think a good analogy might be brush fires. So I live part-time in California in a very, very high fire risk area. And I was told when we moved there, back when natives owned the land, there were 15 trees per acre. Per acre. And now there's 1,500. And so the fires now are bigger. And we can do fire management now. We've learned a lot, and we can mitigate the worst damage. But when you haven't cleared out the cruft for many years, and I think that is unfortunately what has happened in our government, is that we haven't, then we get these conflagrations that burn out of control. I hope we can stop that, but we are going to have some burning, and some of it will end up being healthy over the long run. It's a difficult situation to be in, and I think that public servants who feel nervous about this have a right to be.
We heard from Vivek Ramaswamy in that soundbite, but I had an exchange with him on X, the social media platform, yesterday. And as part of that exchange, I flagged the idea that investors are basically selling out of companies that are historically main contractors to the government for a reason. They think that, that Mr. Ramaswamy, who calls Uncle Sam not supposed to be Uncle Sucker, they think he'll be successful. I guess that I would just like you to outline the reality of doing that, cancelling long-term contracts, looking at alternate vendors, and ultimately reducing headcount at government agencies based on your experience having worked within it.
If we do that, there will be damage in all sorts of ways. There's going to be damage to our ability to protect our nuclear arsenal, for instance. Michael Lewis writes about this in The Fifth Risk. It will chill your bones. We do not want that. On the other hand, we do need some changes. And we need, when we do those changes, to be thoughtful about preserving the foundations that this country is built on. Now, this isn't a DOGE proposal, but if you look at the Schedule F proposal, for instance, it's not actually addressing the real problems of being difficult to fire underperformers, for instance. It's going at the core principles of a independent civil service that's able to tell the truth, that is hired and fired on the basis of merit. We need real civil service reform, not Schedule F.
Jennifer Palka, Senior Fellow at Niskanen Center. Really appreciate your time here on Bloomberg Technology. Kara, what we got coming up?
We're going to discuss TSMC. Will it get, it now seems it will get that $6 billion in grants from the Biden administration to bring chip production to the US. We knew that it had basically been signed, but now it's sealed and delivered. We'll discuss how important that is for the CHIPS Act. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. What's going on in the markets, Kara?
Oh, a risk-off kind of a day. Look, we're back to fundamentals. The euphoria, the highs of the Trump trade just ease a little bit, and we're really focused on the other guy that is, of course, the head of monetary policy. We think about what Jay Powell was saying in terms of the Fed and rate cuts, and the market really paring back how likely that cut is for December. We're off by almost 3%. You can see the sudden jarring move that we've got on this last day of trade. It is the worst week for the NASDAQ, the main benchmark, NASDAQ 100 at least, since going back to the beginning of September. So we have got a sort of a bit of a pain trade to end the week. Move on and have a look at what's happening on the individual movers, because we're actually back to fundamentals when it comes to earnings as well, Ed. I'm trying to like what's happening with some of the chip makers. Firstly, Tesla is up 4%. It's like the only Magnificent Seven company that is on the higher side from the benchmark today. It pulls up, but the rest of the Mag 7 are pulling down on a points perspective. And really, that's a relief rally after yesterday's sell-off on the back of that EV news. Applied Materials down 8%. We're seeing it trade at the lowest level since February of this year. This is a chip equipment maker like ASML over in Europe. This is the US version. And look, it's signaling that perhaps everything in chip land isn't all that rosy. If you strip out AI, again, we're thinking industrial, we're thinking autos, and we're thinking China. And I'm looking at NVIDIA. What does this read across mean for NVIDIA when we get its earnings on November the 20th, Ed? Key for there, we're down by 2.5%. Of course, the key points drag on the day. What are you looking at?
Well, let's go back to the chips and do a deep dive. Bloomberg's Ian King is here with us in San Francisco. On Applied Materials, it's interesting because part of kind of the bigger tech markets discussion is we've got over the election now and earnings are with us. Applied Materials is America's biggest chip equipment maker. Was there anything in it that was kind of consistent with what we've heard from ASML, the big themes about AI investment and those cutting-edge machines, or China, or anything else?
Yeah, no, that's 100% consistent with what we've heard from others. Spoke with the CEO yesterday after the release, and he was like, look, everything's okay. There's nothing to worry about. The long-term picture for this industry is fantastic. I'm not going to worry about, the odd fluctuation here and there on a quarterly basis. Unfortunately for him, investors are, because, you have to be perfect with the amount of money that's been put into these stocks, with the expectations that exist around AI. Outperformance is the only performance.
Well said. I think prior to this, on the year, they had actually been up to the tune of about 15%. Now we're only up about 5%. Ian, the read across is important because we're all going to be obsessing about NVIDIA next week. And this is your main company that you focus on. What does it mean for NVIDIA?
Yeah, I mean, again, the word AI keeps cropping up over and over again. What we've heard with regards to NVIDIA has been very positive, right? The only thing that's going to hold them back will be availability of supply. Can they get enough chips to meet demand? Everything that we're hearing in terms of the fundamentals, in terms of the sell-through, in terms of the capex that's planned is absolutely positive.
You've reported overnight that TSMC, the world's largest contract manufacturer of chips, is finalizing its awards from the US government through the CHIPS Act. What's new and why is that significant?
Well, it's now a legally binding contract between the United States government and TSMC. So I won't say there's no going back, but it makes going back a lot harder. It shows that they've already achieved some of the things that they were supposed to do. They're going to get $1 billion of federal money this year, we were told yesterday. So in general, it's a positive sign. It's moving that whole bill forward, obviously ahead of the administration handover.
Bloomberg's Ian King on all things chips. Thank you very much. Caro.
Sticking with chips a little bit, it's time for Talking Tech, Ed. And first up, shares of Samsung actually rising. They'd been up in South Korean trade today because the tech giant is surprising investors with a mammoth buyback of $7 billion worth of its own stock over the next year. The move comes, of course, amid investor concerns that, well, the growth in the firm's memory chip business has been lackluster, struggling to keep up with rival SK Hynix, for example. Meanwhile, Elon Musk is ramping up his feud with Sam Altman. In a revised court filing, Musk highlighted antitrust concerns by OpenAI, alleging that the company is trying to corner the generative AI market and sacrificing safety. OpenAI didn't immediately respond to a request for comment. And the Ultimate Fighting Championship will be looking for a decade-long partnership when it shops around its media rights next year. This is all according to the company's CEO, Dana White, who sat down with Bloomberg TV yesterday. He also spoke about his relationship with President-elect Trump. Just take a listen.
He's the one that, when we first bought the company, and venues didn't love the UFC back then, he opened up the Taj in New Jersey and said, we did our first couple of events there at the Taj, and he showed up for the first one and stayed till the last fight. That was when he became a fan.
I know you've been friends with him for a long time. Any plans to actually work for him in his new administration?
I want nothing to do with politics. No, I do not, no.
Let's stay in the realm of fighting and competitive sports. Netflix shares actually down 2%. Remember, tonight is the big fight. It is streamed exclusively on Netflix. Jake Paul versus Mike Tyson. Don't know about you, Cara. It's been all over my social media feeds. And it's an interesting moment for Netflix, whether they can pull off. Look, there he is, and there he is. We'll be tuning in. One to watch. We can discuss it on the show on Monday. Coming up on this edition of Bloomberg Technology, business leaders from around the world are gathered in Lima for APEC's CEO Summit. That includes Google's VP of Government Affairs, Karan Bhatia, and we're going to hear from him next. Stay with us. This is Bloomberg Technology.
CEO Summit. It's been underway for the last few days in Lima, Peru. Global business leaders gathered to discuss the latest in the space sector, in AI policy, and much more. Bloomberg's Lisa Abramowitz actually sat down with Google's VP of Government Affairs, Karan Bhatia. Take a listen.
In all honesty, I've been here today. The conversation actually has mostly been, and I've been meeting with foreign ministers, government officials, has really mostly been about how can they get the benefits of this amazing new technological revolution that's happening around artificial intelligence. So they want to hear about what can they be doing in terms of building infrastructure? What can they be doing in terms of skilling their people? There's an awareness that there's geopolitics that impacts the technology sector as well as everything else. But frankly, it's been interesting to me to see how much interest and appetite there is around getting that technological edge.
So how much have you been surprised, or why is it important for Google to be so heavily invested in areas like Latin America, like Southeast Asia?
Well, look, first of all, it kind of starts with our mission as a company, which is to organize the world's information and make it universally accessible and useful. And that universal part is really core to our being. It's a recognition that Google's not fulfilling its mission if we're not operating in places like Latin America, like Southeast Asia, East Asia. So I think part of it literally has to do with what it is we do every day. And as the technology expands and as our business expands, these regions become more and more important. Obviously, you can't look at the growth that's happening in places in East Asia, Latin American markets are doing very well, and not be encouraged by sort of what we're seeing.
That was Karan Bhatia, Google VP of Global Public Policy and Government Relations. Let's get out to Lima, Peru, and bring in Bloomberg's Lisa Abramowitz, who's been there for a few days. And what's notable is the presence of big tech, right? Not just Google, Microsoft as well. What is it that they were actually doing there? Like, give us a bit more of a sense of the role that those tech names played in the discussion.
It's a good question. And first, I just want to say it is notable that the big tech firms were here because there were so many U.S. companies that were absent. We saw big tech, we saw energy companies, we saw JP Morgan. But other than that, U.S. companies were kind of more on the sidelines and Chinese companies much more present. Now, when you talk about some of the big tech names, they want to make sure that they get their footprint as everybody clamors for the artificial intelligence bedrock that a lot of people think will establish the next generation of business. But here's the question. How can they do that when regulatory regimes are not set? And that was sort of the big existential angst hanging over all of this. How do you deal with the fact that President-elect Trump will have different policies than President Biden, and that even now we don't have a real sense of what counts as national security when some of these companies are expanding and what doesn't?
So true, Lisa. And we heard from Xi Jinping at the event, the Chinese narrative coming and saying, look, let's not backtrack. Let's stick to, a global economy here. But how much do you take that at face value at the moment? How are companies able to invest?
Well, this is a good question, and the answer is they look at where they can and what they do know, and I think that a lot of these companies have made inroads. When it comes to, for example, big tech, they're looking for countries that have some energy infrastructure. So a place like this, which has copper and lithium and a whole host of other natural renewable energy sources, that is appealing. On the larger scale, though, there is a hesitance in certain sectors to really invest. And you are seeing that, which is maybe why you're not seeing some of the more consumer-facing sectors like retail really coming down here. But you're right. There is this question of how do you invest at a time of change? The answer is carefully, and that's what people are saying. You are seeing it on the margins, but it's select industries. And otherwise, there is a bit of a paralysis as people try to figure out what exactly comes next.
Lisa, so busy, great conversations, key among them, Jamie Dimon, we appreciate it. Lisa Abramowitz on the ground there in Peru. There is so much to unpack from the US election in terms of geopolitics as well, from a venture capital standpoint too, from AI policies, tax implications. Let's just get to it with the race between US and China. Let's discuss it with venture investing on today's VC Spotlight. Alfred Chuang, founder, general partner at Race Capital, someone who has built businesses yourself, BEA Systems, for example, and I'm really interested, Alfred, at this moment of how much you are putting your mind to the future of US-China relations, the US global relations at this point.
Carolyn, good morning. Thank you for having me back. Very good to see you. this is a very interesting time. I think if you look at where all the activities are in tech and in venture at this point, pretty much everything is AI driven, whether they are like what we do, which is straight in the plumbing. So I'm like the plumber of Silicon Valley. Try to man all the infrastructure, which is all the critical pieces that enable these enterprise applications to now have a neural network inside and be able to be very smart and be very efficient and be extraordinarily efficient. The China and the US part of it is because the way that we train the data for the large model itself, we're now completely separated. So there's a model for China, there's a completely different model what we've been doing, actually multiple models in the United States. Because I think a lot of it has to do with history. Our data are just so much more organized, and we have systems that we've been preparing for the past decade. Like all the things that we put into Spark, Databricks, for example, were all great preparation for organizing this data to make the computer think like human. So US has a huge advantage at this point in time in getting ahead of this program.
I'm interested in just the supply chains fact of it, though, Alfred. You talk about the efficiency, the clear efficiency that's been built in the US, but we're about to potentially see tariffs. Look, we can't be unaware of the fact that a lot of things are imported, even at the most high-end technological element. Will that put pains to efficiency here in the US?
I think there's already pain. I think obviously there's more pain to the people that are not now allowed to be importing the A100, H100 from NVIDIA. That equivalently, obviously, supply chain is not like what it used to be before COVID. So we had that slowdown already. And at this point in time, it's never back to normal. And by the way, we are still very behind in this country. So we don't have any fabs, right? Well, fabs have limited capability. We are dependent on all the fabs in Taiwan. Some of these low-end chips are built in China still. So there's codependency between these countries in order to continue to advance AI. And I have great hope that for the great reasons of continue to progress mankind, we don't stop these trade, which I don't think that will be the case because it just will be dysfunction.
I want to think about the environment a bit, Alfred. This week, for example, my colleagues and I reported that Databricks is doing a tender largely for employee liquidity. And that's a name that Databricks that's in your portfolio. But there are signs things are happening, right? Whether it's the IPO market, whether it's different types of exit through M&A. I'm going to ask you what you think kind of happens next, particularly under a Trump administration for your portfolio companies and VCs that are looking for an exit.
Yeah. Ed, very good to see you. Thank you for having me back. Databricks is in a unique case. Databricks, perhaps, which I believe is probably the best, the most exciting, the fastest growing, large enterprise tech company, and run by probably the best CEO ever in enterprise tech. So they're in a unique place. I think whatever they're going to do in fundraising is their choice that they decided not to go to the public marketplace. They're more than qualified to do so. And I think that's just by choice. And I think that choice come from, which I believe in the past 10 days, is kind of how we feel with all the founders in the Valley, which is we're going through a reboot process. This reboot process will likely have a chance for us to relook at how the SEC, the FTC, the CFPB, how they're going to be conducting business on their policies, how they're going to regulate, how they're going to regulate AI, how they're going to regulate other Web3 technology, cryptos, and other things. And I think we kind of were stuck for the last 2-3 years, in a place where it's very difficult to get anything done from that perspective. Very little company went IPO, very M&A happened. So I think there's a lot of new hope. We don't know yet. I mean, the new administration won't start until the 20th of January. What they're going to do things differently to kind of re-enable this ability to do some of these things. So I think I'm very optimistic. I think next year is going to be an unreal great year for innovation and for venture deploying capital.
Alfred, very quickly, the next area of growth for you?
I'm sorry? The next?
Area of growth. Where are you looking right now? We just have 10 seconds.
Okay, 10 seconds. Without a doubt, AI-enabled enterprise applications. Let's get 50, 100% efficiency on every individual that using enterprise computing. That's where the growth would be.
That was 10 seconds. Alfred Trung, founder and general partner at Race Capital. Thank you very much. All right, coming up on the show, some big news from plant protein manufacturer Plantable. The company's co-founder, Tony Martins-Fachini, joins us next. This is Bloomberg Technology. Plantable Foods has already harnessed the power of plants to manufacture the ruby protein, which comes from duckweed. Now the company's looking to grow the popularity of the nutrient-rich product with a new $30 million Series B funding round. Here with more, Plantable co-founder Tony Martins-Fachini, and welcome to the program.
Thank you.
Also known as water lentils, if you're not familiar with duckweed. I don't really know where to start other than you have some specific technology that has made something others have tried a success.
Yeah, what we really tried to do at Plantable is to work backwards from what the food industry needs, right? I think over the past couple of years, we've seen the food industry being overwhelmed with synthetic, unhealthy, or allergenic ingredients. And we started to look for a natural successor to these unhealthy ingredients that they're using today. We found that in an enzyme known as rubisco, which is, funnily enough, one of the most abundant proteins on the planet, and millions of people are consuming it on a daily basis because it's present in every leafy green. Now, then we started to look for the most cost-efficient and environmentally friendly way of scaling rubisco, and we found that in this aquatic plant known as lemna, or as some other people might call it, water lentils.
So why do you need the $30 million? Kind of what's the process from here?
Yeah, so over the past couple of years, we've built out our first commercial manufacturing module in West Texas, and since then, we've been able to start to fulfill some of the commercial demand that's out there in the market, but we're seeing that we aren't really able to keep up with the demand that's out there. And so we need the $30 million in order to continue to expand our manufacturing operations in Texas to fulfill the commercial demand that's out there.
So, Tony, am I eating this now? Is it available?
It is available. You can actually, there are some products on the market that contain our product at the moment. So absolutely, you can eat it right now.
But where are you in sort of the general approvals when it comes to FDA, when it comes to Food Science Authority as well?
Yeah, great question. So at the moment, we're self-affirmed GRAS. We're working with the FDA to get the final letter of no questions from their side. In the meantime, we're also working on a formal approval from the European Food Safety Authority, which we hope to get by the end of 2025, early 2026.
And what's it like in the world of raising capital for food tech, ag tech right now? Because it's been through some peaks and troughs, shall we say?
Yeah, it's misogynistic is maybe the right word, but I think we've been working incredibly hard as a team to hit milestone after milestone, and that has really allowed us to propel the company forward, show that we can scale up but also scale out our technology, and prove that there is true product market fit for our ingredient while actually discovering new market opportunities every day of the week.
Let's talk about the investors. Why they're interested in you. Are they traditional technology investors? Are they sort of thematically focused on this space? And how did you go about doing this? It's a pretty tough environment, actually.
Yeah, it is a pretty tough environment. I think, like, why are the investors, both the financial and the strategic investors, interested? Is for a couple of reasons, right? I think on the financial side, we've obviously been able to show the de-risking of the technology, the de-risking of the market risk, and it's now a matter of solving the operational risk as we move from being an R&D company to a full-fledged manufacturing company.
Very quickly, Chipotle is on there. What's the kind of go-to-market? I'm assuming that's more a strategic partnership than just financial.
Yeah, I think about Chipotle as a company that's really whose mission it is to produce food with integrity and basically create delicious, clean label and healthy foods for the consumers out there. And what we're able to do is we're able to allow them to unlock new recipes or improve their current recipes without having to introduce new allergens or food safety risk-containing ingredients.
I'm going to look at the ponds near me in a whole new way. Water lentils, as they're known. Plantable co-founder Tony Martins-Fachini. Great to have some time with you. Congratulations on the raise. Meanwhile, that does it for this edition of Bloomberg Technology. What a week, Ed.
Yeah, another astonishing week, a historic week in many ways in the context of the election, but also tech. Check out the podcast. It's worth the recap. Online on Apple, Spotify, and also on iHeart. Big thank you to the team in New York and here in San Francisco. This is Bloomberg Technology.